Hey guys, Kristine McKinley here. Welcome back to my YouTube channel. If you have not already liked and subscribed, please do. Today we are talking about the 50-year loan. Housing affordability is so strained that the White House is coming out with this plan to unveil a 50-year mortgage. And if my eye roll does not say how I feel about it, then you will learn exactly how I feel about it in the rest of this video. So here are 6 things that you absolutely need to know about the 50-year mortgage. Originally, whenever I was brainstorming this idea, I was like, I'm gonna make this an unbiased video and I'm just gonna give the facts, because sometimes I like to get news that way. But after thinking about it and after reading more and more about it, this will not be unbiased. Number 1, the 50-year mortgage will come with a higher interest rate. Yesterday, the interest rate on a 30-year loan was 6.22%, and they are thinking that the 50-year mortgage loan will be about 42 to 57 basis points higher. So we would be looking at closer to 6.64 to 6.79% on a 50-year loan. So yes, you are making these payments over a longer period of time, which naturally is going to stretch out how much you pay and it's going to be less, but you are paying a little bit more interest on this. And number 2, the monthly principal and interest will be slightly lower on a 50-year mortgage than it would be on a 30-year mortgage. So let's run the numbers. On a $400,000 house, your monthly payment on a 30-year loan at a 6.22% would be $2,455 per month. On a 50-year loan at a 6.79% interest rate, that would be $2,343 per month. That is a savings in your principal and interest of only $112 per month. My issue isn't even that is not a justifiable amount to extend your loan by 20 years. But I have an issue with that people are not even talking about. First of all, I'm gonna give a little bit of a history lesson here. Not a history lesson, just a lesson on mortgages. If you're taking out a loan, you have more than just your principal and interest. Your mortgage payment every single month is 4 things. It is your principal, your interest, your homeowner's insurance, and your property taxes. Those first 2 things, they will not change. That is true. Your principal and your interest, they will not change. Your taxes and your homeowner's insurance will change. If you are in Florida and you're watching this video and you're a homeowner, you know that your homeowner's insurance has gone up in the last few years because of hurricanes. I mean, this is like a whole different video, but roof fraud, okay? I'm just gonna leave it right there. What I'm trying to say is that the day that you sign your papers for your home, that is the lowest monthly payment you are ever going to see, because it is very likely that every year your homeowner's insurance and your property taxes are going to tick up a little by little. So if you are so price sensitive that you cannot afford a 30-year mortgage because it is $112 more expensive than a 50-year mortgage, this is not for you. I'll go over some reasons why a 50-year mortgage might be for you, but if it is because of affordability, the answer is no, because you have no idea what could happen in your state within the year that would make your property taxes or your homeowner's insurance spike. And I'm only saying this because of maybe PTSD from just living in Florida and having your homeowner's insurance increase, and property taxes, actually. It makes me nervous when people come to me and say, Kristine, I can afford, I don't know, again, just throwing out numbers, I can afford a $2,000 payment, but if my payment goes to $2,112, I will not be able to afford my home. Right now is not the time for you to purchase, or you need to be buying a house that will get you like a $1,500 a month payment or $1,800 a month payment. If you are on the edge of your affordability, do not push yourself past that edge, because I can guarantee you that your monthly payment will increase. And again, it's not the principal and interest that'll increase. So pay attention whenever you're watching these videos about these 50-year mortgages. Your principal and interest will not increase, but your taxes and your homeowner's insurance can. Number 3, you will pay far, far more in interest using the 50-year loan than you would on a 30-year mortgage. This is probably obvious. Not only is your interest rate a little bit higher, and then there's like 20 extra years of having to pay partially interest on every single mortgage payment. But let me break down the numbers to you. Using the same example, you're getting a loan for $400,000. On a 30-year loan, if you take out a mortgage for $400,000, you will be paying $484,000 in interest. That is so mind-blowing, right? But listen to this, it gets worse. On a 50-year loan, you will be paying $1,005,000 in interest. You are doubling the interest for a little bit of breathing room every single month. So if we're talking wealth building, this ain't it. Number 4 is most homeowners move way before this loan ever matures, which I feel like some people are making that an argument to do this 50-year loan. That is my argument to not do the 50-year loan, because let's say you stay in your home for 15 years. If you're making these monthly payments on a 30-year loan after 15 years, you will have built up a decent amount of equity. A lot of your mortgage payments will have gone to principal. But using the 50-year loan, you're building equity so much slower because so much more of your monthly payment is going towards interest than it is principal. And if you did not know, so if you are so price sensitive that you cannot afford a 30-year mortgage because it is $112 more expensive than a 50-year mortgage, this is not for you. The majority of your first few payments, it starts more interest heavy because those banks want to get paid. They want to get paid quickly. So it's not like half of your payment is going towards principal and half of it's going towards interest. No, it's like 95 of it is going towards interest and 5% is going towards your principal. Even on a 30-year loan, you don't feel like you're building equity that fast until you get into the later parts of your loan and you're like, great. But on a 50-year loan, that's even harder. So let's say you take out a loan for your 50-year loan and you're like, man, I've been making these monthly payments every single year. Let's look at what my balance is. You're not really going to be making much of a dent in your balance, especially the first 10 years. So it's just not building wealth like you want it to. Number 5, and I would like to see this all play out before I really give my opinion on whether or not this is going to happen, but passing the bill for the 50-year loan could increase buyer demand and therefore increase prices on homes, because right now we don't have a ton of demand. People are still getting used to the interest rates and all of that stuff and the prices of home after COVID, especially in Florida. I don't know where you're watching this video from, but that's what we're feeling in Central Florida right now. We are having much more of a buyer's market than a seller's market. This could kind of push us into a seller's market and increase prices. If people do like this, then that would create more buyers in the market and therefore more buyer demand. And number 6, the public is not really thrilled about this. I'm obviously in the real estate industry, so I'm hearing so much. I've been getting so many calls from lenders saying how good of an idea this is. And I might get some hate from lenders on this, but I want my clients to make smart moves because I rely on repeat business in order to keep my business going. So I don't want people to go, oh, Kristine recommended this thing for me that's not even financially smart. No, I want my clients to build wealth. And I think that people are starting to realize that this really doesn't make things more affordable. It just stretches out how long you're gonna owe money for. I mean, how can you say that this is more affordable when it doubles the amount of interest? It more than doubles the amount of interest that you're gonna pay in the 50 years. So again, I know I'm gonna get some hate for this. I know that some lenders are going to argue with me on this, and I'm okay with that. So for the record, I do not recommend the 50-year loan. And because the difference in monthly payment between the 30 and the 50-year loan is so small, I can't say that I even recommend it for monthly affordability. If you guys have any questions on this, or if you want a strategy session to talk about wealth building in real estate, go to the QR code if you can scan it, or down below in the description, I'll have my information. Bye.